Thank you everybody today for taking time out your day to join my group here on Facebook. What is Bitcoin and how does it work? I want to commend you guys for taking the first step into awareness of your financial discipline and financial lifestyle that we're going to be enhancing and taking to the next level. So thank you for joining the group and thank you for caring enough about your finances to want to do something about them. My name is Don. I'm the owner of What's Bitcoin and How Does It Work. And one of the reasons I started this group is because I know everyone is hearing about Bitcoin. It's really fluent in the news. It's a big catalyst. And I know when I first started, I didn't know that much about Bitcoin. I just know people in my age group, the millennials, might just be getting into investing. And we need to educate ourselves and know what we can invest in and know what resources are available, and Bitcoin is one of them. So I wanted to name this group that, but as you all know, this group is way much more than just talking about Bitcoin. I like to stay current with the latest news, anything related to the stock market, anything related to our stocks, the economy, infrastructure bills, politics, anything pertaining jobs and wages and growth. That's what I like to bring to us and keep us current in, because the world is forever evolving. It's a you can't be in the past. You have to be up to date because things change nowadays and move particularly quickly. So a little bit of information about me. I'm 37 years old. I'm a father. I'm a brother. I've been a truck driver for the last 7 years. I've owned 2 trucks of my own. Trucking is a big passion of mine. It's not a hobby, it's a career, it's a lifestyle. I love trucking. I also own real estate. I bought my first investment property when I was 33 years old on the south side of Chicago. It was an FHA loan. I think I might have put down less than $3,000, and it's been beautiful. I've owned that piece of property for 5 years now. I have some insight in real estate. I have insight in trucking, and I also have established 2 LLCs. One is a LLC, limited liability company. The second one is a corporation, which I converted to an S corp. That's just a small corporation, small business corporation. It's a better tax strategy. I would suggest anyone starting out, if you're going to be starting your own company or business, to go with the corporation. That's an Inc. or CORP, a corporation at the end of your title, and then convert it to an S corp. If you need help on that, reach out to me. I'll show you where to go and get the form so that you can get the right tax breaks for being a small business. Guys, I want to get to know if there's any way I can help you guys, or if there's any area in your life that you're uncertain about. Reach out to me. Hit me up in Messenger or any way you want to reach out to me, and just let me know. I'm always willing to help if it's employment, if it's just advice, or if it's something I don't know that I can learn. I love to learn. So if it's something that you're reaching out to me and I don't know, that's an opportunity for me to go and learn something new. So please reach out and let me know if there's any way possible we can work together or I can help you. Okay, on today's topic is dividend investing. I'm going to read just going to basically read an insert off of a post article. I'll leave everything at the bottom. Just going over dividend investing. I love dividend investing. It's when you buy a stock and the stock pays you a dividend, maybe 4 times a year, or some of them pay monthly. Average, they pay 4 times a year. So that's one of the reasons I love dividend investing. I invest in dividends for the long term. It's nothing short that I'm going to get into. It's something for retirement. And I think that everybody who has a portfolio should set it up to have some dividend stocks in it, if not all dividend stocks, so that you set yourself up for when you can't work anymore, you want to keep a check coming in. So let me get to it. Let me read this. Okay, so with the current economic risk brought on by the COVID-19 pandemic, investors are gravitating towards buying dividend-paying growth stocks that have a stabilized background for a regular flow of income. In the study published by investment company Tweedy Brownie Fund Inc., high dividend yield equities were shown to have delivered better returns than their low yield counterparts. Got a little hot there. Okay, high yield. You want a dividend that pays a high yield. Yield means it's just another term for how much it pays out. If it's obviously if it pays 1, 2, 3, the higher the better. So that's just the more money that you get on those quarterly increments when the dividend pays out a dividend. You want a high yield paying dividend. Okay, high dividend yield equities were shown to have delivered better returns than their low yield counterparts. The study showed that high yield stocks produce a 13.7% annual equal weighted return with a 15.5 standard deviation. In comparison, the low yield stock returned 9.0% with a standard deviation. Many beginner investors do not understand what dividends is as it relates to an investment, particularly for an individual stock or mutual fund. A dividend is a payout of a portion of a company's profit to eligible stockholders, typically issued by a publicly traded company. So a dividend is a payout from your company that you invested in. That's simple. You invested in the company pays you a dividend. All companies don't pay dividends, only certain ones do. However, not all companies pay a dividend. Usually, the board of directors determines if a dividend is desirable for their particular company based on various financial and economic factors. Dividends are commonly paid in the form of cash distributions to the shareholders on a monthly, quarterly, or yearly basis. A lot of my dividends, they pay on a quarterly basis. You have some that pay monthly, very few, and you have some that pay yearly, very few. Majority pay quarterly, 4 times a year. Key takeaways. Dividends are discretionary distributions of profits which a company board of directors gives its current shareholders. A dividend is typically a cash payout to investors made at least once a year, but sometimes quarterly. Stocks and mutual funds that distribute dividends are likely on sound financial ground, but not always. See, a lot of companies that pay out dividends are your bigger companies like your AT&Ts, your Coca-Colas, companies that's been around and already have established themselves. That's why a lot of investors like to buy dividend stocks, because they're solid companies, so you don't have to worry about the company going belly up. So that's another reason to invest in dividend stocks, because you're getting a solid, sound company that pays you an incentive to invest in them. Investors should be aware of extremely high yields, since there is an inverse relationship between stock price and dividend yield, and the distribution might not be sustainable. You want to pay attention that when you're investing in these dividend stocks, you want to look at their payout history. It just means have they missed payments. These dividend companies, they pay dividends, but they don't have to pay dividends. They can decide to 1 month not pay a dividend, not pay their shareholders a dividend, or for a whole year not pay their shareholders a dividend, or to just do away with the dividend forever or bring it back. It's at their discretion. So you want to use your investing brokerage to, like I use Fidelity. You want to go in there and look at the history of these companies. Have they missed months of paying dividends? How on track are they about paying those dividends? And a lot of companies have great track records. You also want to look at if they're increasing the dividend, meaning if the dividend was a quarter, did it go up to 35 cents? Are they adding to the dividend? Are you, meaning they're giving you more money back each year and you're doing better? So those are a couple of things that you can look at when you're doing your research on which dividend stock you want to get. Stocks that pay dividends typically provide stability to a portfolio, but do not usually outperform high-quality growth stocks. So you have dividend paying stocks, you have high-quality growth stocks. The difference is AT&T and Coca-Cola, you might not consider those to be, You might not consider those to be growth stocks, but you definitely know those companies. But those companies are solid, sound companies. Meaning, if they're trading at $100 a share, they might go up to 110, but they're not going to 150 or 200 in 1 year. You have some growth stocks that you'll buy it at 100 and then you hold it for a year and now it's at 205. That's a growth stock. Those are great stocks to own and know about, but it's just different ways that you can invest. I like to go dividends and have a few growth stocks, breakout stocks, or stocks that, meme stocks that are popular and gaining a lot of ground, and potentially the next Coca-Cola or the next AT&T, but they haven't gotten there yet. So they're starting out like $35 and they have room to grow. When AT&T and Coca-Cola are already, established and they're paying you dividends and they're not growing a lot, but they're not losing a lot either. So they're solid, sound companies and they're good investments over the long term. You want to look for companies that you understand, that you know about, and that you expect to be around for a long time. Dividend Basics. Shareholders of any given stock must meet certain requirements before receiving a dividend payout or distribution. You must be a shareholder of record on or subsequent to a particular date designated by the company's board of directors in order to qualify for the dividend payout. All this means is that when companies pay dividends, they'll usually announce. They'll give an announcement. Say, if company's paying a dividend in April, they'll make the announcement in March, and then you'll have to own that stock. Say you own one share of AT&T, $100 share. You bought it in February. They make the announcement in March. They pay you the dividend in April. You've had it from the announcement date to the date of they gave you the dividend. You can't just go and buy a company because you found out they're paying their dividend April 28th, so you want to go buy it April 25th. So that's all they're saying is you need to be on record of owning shares of the company on the announcement date, meaning basically like a month before they pay the dividend. So that helps from them. A lot of people buying and dumping the companies. So just know that you can't just buy them a few days before. You have to actually have held it for at least a month. Stocks are sometimes referred to as trading ex-dividend, which simply means that they are trading on that particular day without dividend eligibility. If you buy and sell stock on its ex-dividend date, you will not receive the most current dividend payout. All that means is ex-dividend date, like its rear date, the date that it already paid out. And you can see that when you go to buy the stock, you can see the past dividend payouts and what day it already paid, and then the next day that is going to come out and pay the next dividend. And you just want to just make sure that you keep track of those dates and that you know those dates, so that you don't get, you don't be thinking that you're supposed to be owed a dividend and that you didn't get it because you didn't have it on the exit date. So that goes along, that goes in hand with the owning it for the month. Now that you have a basic definition of what a dividend is and how it distributes, let's focus in more on what more you need to understand before making an investment decision. What is a dividend? What is the dividend yield? It may be counterintuitive, but as a stock's price increases, its dividend yield actually decreases. That just means the more that it makes a lot of sense, because if you got two companies, and one company is two companies $100 and $100 for their stock price. This company over here goes up to 150. They're paying out $5 dividends. This company doesn't go up, and they're paying out $5 dividends. So this company right here, it didn't go anywhere. You paid $100 for it. It might have went up $2. Now it's at $102. You made $2 for every one share that you own, and you still got your $5 every 4 quarters payout distributions. They paid you $5 each dividend payment. The other company, it was at $100. Now it's at $150. So your $100 turned into $150, but the dividend, instead of it paying you $5 four times a year, it dropped to $3 because the stock price went up. So the dividend that's paying out went down, which doesn't really hurt you that much if you think about it. You made $50 on your 100, and you lost what, $2, $4, $6, $8 for the dividend payout, but your overall stock price went up. So either way, you made some gains, and that's just the difference between it being inverted, meaning when the stock price goes up, the dividend price goes down. That's what they mean. Many novice investors may incorrectly assume that a higher stock price correlates to a higher dividend yield. Let's look into how dividend yields is calculated so we can grasp this inverse relationship. Dividends are normally paid on a per share basis. If you own 100 shares of ABC Corporation, the 100 shares is your basis for dividend distribution. Assume for the moment that ABC Corporation was purchased at $100 per share, which implies a total investment of $10,000. Profits at the ABC Corporation were unusually high, so the board of directors agreed to pay its shareholders $10 per share annually in the form of a cash dividend. So as an owner of ABC Corporation for a year, you continue investing in ABC Corp, resulting in $1,000 of dividends. The annual yield is the total dividend amount, 1,000 divided by the cost of the stock, 10,000, which equals 10%. So that was a lot of nuance and jargon that, I understand, but it's not relevant. It just, we're breaking down everything that I just said, how the stock price relates to its yield and what the shareholders will receive. So they were just telling you that if you bought 10 shares at $100, that's $1,000. And then, if you bought 100 shares at $10, that correlates to $10,000. And then, so you own 100 shares. So if you get $5 for each share that you own, you just times $5 times 100, and that's the amount of dividend that you receive for one payout, which you get 4 payouts. So that's why it's great to own dividend stocks, because if you own 100 shares, you get $1 for each dividend. That's $100. 4 times a year, that's $400 payout that stock just gave you. And just say, you got a couple of companies, 100 shares here, 100 shares there. You can see already that you can take on some money if you own more. The more you own, the higher the yield, the more dividend payouts you will get. So I'll leave it right there. I enjoy talking about dividends. I enjoy talking about investing. I enjoy talking about the stock market. I hope that this helps you guys understand a little bit of why I want you guys to start to put together a dividend portfolio and why it's so important. If you guys have any comments or any questions, leave them at the bottom of the page or anywhere in a box messenger that you can get to me. Just get to me. I am happy to answer any questions that you guys have. Also, I want to let you guys know about this great deal that's going on. Underneath, I have a couple of links down below. You guys can go and get your domain for a website. I think owning your own website is a great tool to have under your belt, because you can relate to the world what it is special about you, or what you're passionate about, or what you're interested in, or just ideas and beliefs that you have. So I have a link down below that'll save you some money on that domain. Go ahead and click it, and enjoy. It's always a pleasure, always a blessing talking to you guys. I hope everybody's feeling well, and I caught everybody in a good sound place. I want nothing but prosperity and greatness for you guys, and I'll catch you guys on the next one. I'm trying to do 3 of these a week just to keep us where we need to be. So I'll see you guys later. Signing off.